Now here we just want to look at a quick update on the demand and supply revisions. So all three agencies lowered their call on OPEC crude forecast for 2023. It's not anything crazy. We've been talking about some of those slowdowns. It's going to be important to see how February adjusts. And once we start to see how the Chinese reopening really takes place, because one of the things that we've been saying is that it was going to be a bit underwhelming. And you did see a quick slew of purchases at the back end of January to kick off, really the back half of Jan and the first, day or two of Feb. But things have really started to slow down. And when you look at Angola as a bit of that swing production, because if you think about China was the largest buyer for a very long time of Angolan crude. And haven't purchased anything in Angola over the last, let's call it, 5 to 7 days. And you're starting to see differentials soften again after seeing them firm up. And we talked, I think it was 2 or 3 weeks ago, where we saw differentials getting a bit tighter, things starting to flatline. And now that has since gone away. And some of that is just really being driven by, China already kind of feeding the beast, already taking in a lot of this excess capacity, as we've talked about. And then the important piece as well that we like to talk about, and just to reiterate what we said in segment 1, Kuwait is going to increase their exports of refined products, including diesel, jet fuel, and that's going to fill some of that void to Europe. But that means that they're going to consume more crude. So if they consume more crude internally, that means that they may export less, but they're going to export more products. So you have to look at the two of them together to understand where some of those dynamics are. And it's coming with another train coming fully online. When you look at Kuwait's massive Al Zour refiner, in terms of 615,000 barrels a day, and it's first of 3 lines. So you've had line 1 coming on, and now you've had line 2. And here we sit in terms of where things are today, how things continue to push forward. And again, these are some of the benefits that we continue to see. Now when we look at Saudi, it's interesting because we had a fairly sizable increase in OSPs coming out of Saudi, which runs counter to what we were expecting, because you had builds in the Middle East increasing. You saw you did see some strengthening of buying, but it wasn't Dubai. It was a lot of West African products, because you had the discount between Dubai and dated Brent tightening. So dated Brent was getting cheaper in versus where Dubai was. So that was something that's showing that there's a bit too much Saudi. There was just these kind of gluts that, and instead of trying to be more competitive and pushing down OSPs, increasing the discount again against dated Brent, supporting some purchases, they did the opposite. And now if you take that to the next level and say, okay, well, some countries in Asia will adhere to the price caps, won't be buying Russian crude. So even though ESPO and Ural discounts have increased, they're still also going to now dump product in. So with OSPs going up, that's going to put some like South Korea, Japan at a disadvantage, and is actually going to push them to buy more U.S. crude again after them slowing down a decent amount. That's again going to move some more U.S. product and less Saudi product. So again, maybe they wanted to give up a little bit of market share because they're going to do something similar to Kuwait, where they want to keep that crude internal. They want to turn it into more product because they can export a higher value product into the European markets. And that very well could be the game theory here. But again, this is something where they could have done both, where they could cut pricing a bit and protect those OSPs, protect some of that market share in Asia while still consuming more internally and increasing those exports. So Middle East Arab light crude Saudi to Asia OSPs. Here you can see that they did increase it. It's still below where it's been previously, but it's still at the high end. And that's where even, why move it up? Like, what is the benefit here? Because you already have a refining group that is coming under increasing pressure because of cheap Russian products, because of massive, there's a record amount of gasoline in storage, and middle distillate's the only thing kind of protecting you at this point. And by increasing OSPs, you're going to decrease the margin that you're going to make at the middle distillate level, again, putting in some of those problems. So then when you look at into Europe, you can see here that they increased OSPs well above they've been previously. It's going to put a way more weight on how much product is going to get purchased. We're already hearing that Europe is going to reduce their purchases. This will be a bit more supportive for West Africa, and again, very supportive for Kuwait, for Kazakhstan, for Libya, and for the U.S. And then looking at Turkey, so the flows from Iraq through Turkey have started again following the devastating the earthquake that struck. So far the loss of life has been estimated at about 8,000, and that's just at the early stages. So again, it's very unfortunate. Typically, when anything like that happens, there's a full stop, force majeure. Make sure that the structure is sound. Make sure that there's not any leaking, and then you'll bring that up to snuff over time. It's important for Turkey because it's a very it's lucrative. So that was going to be a high priority to continue those flows through CN. We're not trying to be insensitive because obviously it was devastating, but this is how the world works and how things go about. So we have seen that start back up. Those flows will continue, and a lot of that will continue to move into the European markets. Now, looking at some of the things in terms of China, travel has recovered in 2023, but again, still below the pre-COVID levels. We don't see that changing. And then it's interesting because holiday moving going is kind of a good bellwether of how active people were. You can see that it was a nice increase, but still well below normal. And again, that leads more to the Chinese consumer. And we had a great chart, which is something that we've tried to reiterate. There's a lot of pressure there, where even though their savings have increased exponentially, it still pales in comparison to the losses that were taken during the real estate rout, the housing drop, and those are things that are not going to offset. And I think that's a big problem when we look at some of the different the factors coming into where things are, how things are going, and that's, I think, some of these concerns that we have in general in terms of the strength of the Chinese consumer and the strength of their reopening. And that's when you look at the China bouncing back and the New Year travel season, where we are in 2023 so far, and again, where we were in 2019. It's going to outperform 2021 and 2020. That is a foregone conclusion. It's just we still don't see it getting back to 2019 levels. And that's where I think that misconception happens. And it's really not only just because of, some of the overhang from COVID, but it's more along the economic front where manufacturing is still weak. Exports are still going to be abysmal, back to what we talked about in segment 2. And then the local consumer just isn't going to be there. So the Middle East crude oil floating storage, has fallen back to where it was in 2022, but that's still a very elevated number versus where we've been historically. And that's why, again, coming back to some of these problems, some of these issues of moving product, how much of this is Iranian that's going to get pushed into the market at a discount? How much of this is Iraqi and UAE that are struggling to find some homes? Typically Kuwait and Saudi sell on term, so a lot of this isn't going to be them, but it's giving you an indication of how much demand are they going to have for term, and are people going to buy above their term levels? And the short answer is no, given where pricing is, which is going to leave additional Middle Eastern product in the market. U.S. exports, dropped a bit. We still think it's going to stay about that 3.8 million barrels a day. I think that is a very interesting piece in general in terms of where we are and how that's going to play out. So when you look at the crack spread for Singapore cargoes for gas oil, you can see that when zooming out, it's still strong. And again, we've said it's not that it's getting back to where it has been in historics. It's that it's falling well below the range we've been in, and gasoline is already a problem. So gasoline's already a problem, and this is the only thing really making you profitable. And I think this is an overarching problem in terms of where the issues are in general, and in regards to where things sit and how that sits in its place, where if this weakens further, which it's likely given where Russian product is going to go, that's going to push some of these margins negative. As they go negative, well, you're going to see economic run cuts. A way to protect them from going negative is by cutting OSPs, which Saudi they not only didn't cut OSPs, they raised OSPs, which is going to hurt the margin further and create a bit more impetus to maybe pull forward some of that turnaround time, pull forward some of that maintenance, and that creates, I think, a bigger problem when you look at broader oil demand, especially in Asia. Now, when you look at the spread between Dubai and Brent, here you can see it continues to tighten, which means that the discount of Dubai versus Brent continues to tighten, where it's just dated Brent is pricing itself into the market, and that's helping because dated Brent coming down helps make West African crude more affordable because most of it is priced off of dated Brent, which is why it's a big issue that we're starting to see those flows slow down, which means that the demand is waning, that there's going to this built-in problem that we're seeing. Crude oil on the water moving back to all-time highs as we get more Russian crude into the market, as we get some of those flows. I think that's some of the issues that we see in general and some of the pieces that we're seeing on the crude oil on the water. Now, when you look at crude oil in transit, record levels, we see that remaining just because you have, again, more Russian product, more Iranian product. All of these things are, again, miles per ton, all of these things continue. That's going to remain the case in general. Crude oil and floating storage is stabilizing a bit. We do see it drifting higher, and that's just because we've had a big surge in oil in transit. If there's a surge in oil in transit, some of that is coming from floating storage. So one goes up, the other goes down. As that transit shows up, floating storage goes back up. And again, it's that timing delay that we've talked about so many times. And a lot of it is going to go to Asia. And again, that's why it's going to stay elevated. It won't be at 2021 levels, but we do think it's going to get much closer to 2022 levels, just given where the dynamics are and where the movements are in terms of the flows. And here's the flows that we're talking about, where China's supertanker crude imports are outpacing 2022, and that's keeping things elevated in general in terms of where the flows are, in terms of where some of these pieces remain. And I think that this is a big component of where the shifts are headed and how those shifts are going to take place as those imports come in. And again, it's also going to pull back Chinese spending because they have to take delivery of these. They have to move them through the system, and they want to see where are flows and what does demand look like after Lunar New Year really shakes out. And as we've been saying, we expected the China Shandong refiners to shake off the seasonal slowdowns. We expect to see these increases, and here we are. And that's something that we think is going to progress, which is going to be a positive for crude demand, pull some of that through. But that's why if the demand isn't internal, you're going to see more going into the export market. That's going to keep some of these flows in general. And that's something that I think is going to remain the case overall. West African crude oil floating storage, again, moving down. As we said, we saw a nice little sweep of buying. That is going to come to an end at this point, and we expect to see a bit of an increase in floating storage, especially as you still have Angolan unsold cargoes, and their next round of announcements is coming out, which is going to, again, put more of an impetus for them to sell and move some of those cargoes. When we turn to the U.S., gasoline exports remaining elevated, distillate exports remaining elevated. Same with propane, propylene. Again, not too much of a surprise here. We expect that to remain the case in general. Crude oil exports had a drop, but again, it's still a lot of that is timing. We just given the dynamics of OSPs increasing into Europe, that's going to keep flows going that way. And then as OSPs were also increased going into Asia, that's going to pull more U.S. crude into the Asian markets as well. When we look at gasoline exports staying near the highs, but as we've been saying, we think it's going to stay within the cloud, just at the very top end of the cloud as they try to move this and balance out their storage levels, because there's still a lot of storage and there's not as much need to send it into pad 1. So going on the Colonial Pipeline at a greater level doesn't make sense. Going to the international market does. Distillate is going to stay within the top end of the cloud. There's a lot of money to be made, especially now that we're past February 5th. And then if you think about it, Russia is sending more diesel into Brazil and into Latin America, which is where the U.S. used to send some of that product. So now we're going to go into the European markets a bit more and shift some of those flows, which are going to continue to drive some of those adjustments. When we look at crude oil export data, again, lumpy, back within the cloud. We expect that to remain at the elevated level, with propane, propylene remaining at the top end. LPG exports are going to stay strong. We don't see that adjusting in the near term, as we continue to see that set new incremental highs. Now, when we look at Fujairah, the total Fujairah was at 17.624 million with a drop of 1.389, which again, stock movement saw a rise for light distillates and a drop in middle and heavy. Light distillate rose 387,000 barrels to 7.36. East of Suez gasoline complex strengthened a bit amid expectations that Chinese gasoline exports would come down. But one of the things that we keep talking about is Chinese exports were expected to be as low as 350,000 metric tons, and they were expected to be about 1 million. And as we were saying, our estimates were never 1 million. And we said it to clients, it was closer to about 500 million tons, and that's 500,000 metric tons, and we're still holding to that because you've seen an increase in flows, you've seen an increase in run rates, and that's going to, again, if it's not consumed internally, they still have a lot of that slack on the export allotment, and that'll push more externally. Middle distillate decreased 603,000 barrels, came down 1.73. East of Suez gas oil market was slightly weaker, with market participants still focused on the tender activity. The market is still quiet, but the biggest issue remains the Russian product, which high volumes of Russian diesel imports ahead of the EU ban and good refining margins in Europe created a diesel supply glut, which provided some of this buffer. But now that this ends, stocks of Russian fuels have also remained higher than expected. And there's a view that as that stocks rise, that's going to dump into the middle distillate market, which we expect, but it's at a very low level. And as it remains at a low level, that's going to still provide some of that impetus, but it's also going to attract imports of Russian product into both the Middle East and Fujairah, as well as into Asia. Heavy resid fell 1.182 million. And stood at 8.53 million barrels. Spot trading activity was Singapore and Fujairah. Traders citing slightly better than average demand in the city, state, and below average inquiries in the UA port. Again, it's just going to be some of this flux. As Russian product increases in general, we do see a lot of this coming back into the Middle East, and we see heavy disti going back to 10 million barrels in storage. We see light distillate going back to about 9 and middle distillate back to about 3. Brent time spreads got a bit better. We shifted from February, April. Now we're April, May. And here you can see that we've shifted a bit out of contango into backwardation. It's still slight, but again, the OSPs will help this a bit in terms of staying here. So that's something, but you can see we just expected to be within this range between 20 cents and 40 cents going forward. Now, when we look at flows, you can see a big step up in Norway that was expected. Nigeria, a bit of a slowdown. Same with Angola. North Sea, really Russia had that big spike, staying around that 4.6 million barrel a day level. They're going to try to stay there. Libya staying about 1.1. Those are some of the steadiness that I think we see in general based on flows. But Vital offered 330,000 barrels of Angola's Dahlia from March 5th to 15th arrival at dated Brent minus 15 cents. That declined from plus 5 cents, and then it was plus 20 cents. So again, you're seeing this steady decline in terms of pricing as there's more concern and as more cargoes get added. That we're seeing a lot of this slowdown in March, which is when we're already out of February, we're in March, and there's still that excess to be sold. And then in general, when you look at Angola's crude sales from March, loading shifted up a gear this week, thanks to some stronger demand from Europe and Asia. But now we're actually starting to see that slow down because that was looking at last week. And now this week, we're starting to see a bit of that shift. And then 21 cargoes sold out of 31 scheduled. And now so far, the remainder still. So we had a quick purchasing slug and now nothing. And that's a bit of a concern. Could it be people digesting? What do they need? Absolutely, which is why we call attention to it, because this is going to be an important thing to watch as we progress through the month. Genscape crude floating storage, crude land storage, fairly flat. We do see some increases here. When you look at gas oil inventories in Europe, you can see the builds. A lot of that is just being driven by absorbing some of that diesel and some of that gas oil ahead of sanctions. When you look at gasoline record levels, they're going to try to dump this as much as they can. We don't see gasoline records stopping in Europe, with fuel oil again remaining elevated as that Russian product dumps into the market, taking market share and leaving more European product in storage. Singapore, when you look at, in general, big builds on the stockpile side, we think that continues just given as that new product dumps into the market. When you look at light distillate, as we've been saying, record levels, this is going to put pressure on crack spreads for Asian refiners. And this is, they're just setting, going back to 2007, this is the most there's ever been, which is why we see, again, that reverberation back into Fujairah and beyond. Then when we look at middle distillates, steady builds, still on the low end though, and that's why we still see some of that pressure, which is why we talked about the Asian crack spread has come down, still above going back the last 5 years. But again, as the builds increase and that comes down, as we showed with light distillate, this is the only thing keeping things afloat, with heavy resid continuing to see some steady builds as that Russian product comes in as well. North Sea floating storage fairly flat. We see some small increases, nothing major, especially as some of the slowdowns that we've talked about. And we do have Johan increasing. And then when you look at Europe, you can see that nice little spike. It'll stay elevated, but again, we saw that's going to be that back and forth between European floating storage and moving it onshore, which is as we've discussed. So that's what we have for you today. If you have any questions, please feel free to reach out. We'd love to hear from you. Comment section, obviously on Twitter, and we hope you enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.